This is the last topic of this chapter, journal entries in the books of purchasing company. So the first entry is purchase consideration due entry. So business purchase account with purchase consideration due to liquidator of selling company. So the liquidator is a person who is officially appointed by the selling company to undertake the process of liquidation. Okay, so the whatever due is there in form of purchase consideration, ultimately the purchasing company is going to settle that amount to liquidator of selling company, because he is a representative of selling company. So the second entry, incorporating assets and liabilities taken over. So in last session we studied about accounting standard 14. So what accounting standard says, there are two types of amalgamation. One is an amalgamation in the nature of merger. The other one is amalgamation in the nature of purchase. So amalgamation in the nature of merger, under this we follow pooling interest method, and under amalgamation in the nature of purchase we follow purchase method. So the basic difference between these two methods is the second entry. So let me explain this. Under pooling interest method, pooling means we are taking all the assets and all the liabilities. Here all the assets means including cash, to all the liabilities. All the liabilities means including reserves and surplus, to business purchase with purchase consideration to general reserve. Okay, so this I'll explain you while doing the problem. So all the asset means including cash, to all the liabilities means including reserves, to business purchase, this is with an amount of purchase consideration which the purchasing company is going to pay to selling company. This is general reserve. So I have made two notes. All assets and liabilities should be taken at book value. Yes, here we need to take all the assets at book value. Second, reserves has to be taken under all liabilities including statutory reserve. So here all liability means including reserves plus statutory reserves. Okay, this is under pooling interest method. The second one is purchase method. So under this method we are going to debit the individual assets which are taken over by purchasing company. We are going to debit only those assets which are taken over by the purchasing company. In this case we are debiting all the assets including cash. Okay, here in this case we are taking only those assets which are taken over by the purchasing company, to liabilities. Here liabilities means only those liability which are taken by the purchasing company. To business purchase account, I'll explain these two. This is goodwill we need to debit if the debit side amount is coming less, and we need to adjust into capital reserve if the credit balance is coming less. Okay, so this is like we put a goodwill account when there is a less balance on the debit side, and we show it in capital reserve when there is a less balance on the credit side. The next entry, I have one more note for this. Only those assets and liabilities which are taken over, sorry, this this is not necessary. Only those liabilities which are taken over by the purchasing company has to be taken over for at market value. So one more thing I need to clarify, I want to clarify over here. So only those assets which are taken over by the purchasing company, and this should be at market value. Here all the assets are taken over at book value, here at market value. So these are the main basic two differences. Here we are taking all the assets including cash, all the liabilities including reserves. Here only at book value. Here we are taking only those assets which are taken over by the purchasing company, and only those liabilities which are taken over by the purchasing company at market value. These are the two main differences. Okay, then the next entry. If the purchasing company wants to maintain the statutory reserve, in that case we are going to open a new account that is called amalgamation adjustment account. So amalgamation adjustment account to statutory reserve account. So the statutory reserve which is going to maintain by the purchasing company even after amalgamation. So this will be shown on the liabilities side of the purchasing company's balance sheet, and this should be shown on the asset side of the balance sheet of a purchasing company. Okay, then the next entry, a discharge entry. The first entry was a due entry. The fourth entry is liquidate PC discharge entry. So again we are going to discharge the PC to liquidator of the selling company, because he is a official person who is representing selling company. So liquidator account, liquidator of selling company has to be debited to share capital. If we are discharging in the shares, we need to credit to share capital. If anything we are paying extra, if anything extra paid by the purchasing company has to be credited, and if anything paid by cash or bank, we need to credit that too over here. Then next, for all this process, the purchasing company incurs a preliminary expenses, or we can say it as a formation expenses. From purchasing side, from purchasing company side, there will be some expenses. Those expenses are called preliminary expenses, which is met by purchasing company. So preliminary expenses account to bank account. The next entry, realization expenses paid by the purchasing company. So this is a realization expenses which is paid by the purchasing company on behalf of selling company. So here you have a two option. You can either pass two entry, or you can pass only one entry. So whichever, that is fine. So the first one, the first option is goodwill account to bank account. Whatever realization expenses coming over here, we need to debit it to goodwill account to bank account. Then you need to just reverse this entry, capital reserve account to goodwill account. Or instead of two entries, you can pass one entry, only one entry, capital reserve account to bank account. Ultimately, whatever realization expenses paid by the purchasing company has to be adjusted in the capital reserve account. So that's the reason instead of two entries, we can pass the one entry, that is capital reserve account to bank account. Okay, in the next session we will try to solve two problems at least. If the amalgamation in the nature of merger, and will pass one more question under Amalgamation in the nature of purchase.